I'm Karen Horstmann. I'm the head of U.S. real estate for Caisse, formerly known as Ivanhoe Cambridge. So, starting with Norges Bank was a very unique experience because it was starting with a blank slate. So looking at a blank piece of paper, really understanding the stakeholders' objectives was my first priority. So trying to almost get down to how the brain is wired of the ultimate decision makers. What are you looking for real estate to do for your portfolio? In that case, it was to provide stability and predictability of income flows. And so it was also being very scalable and efficient. And so the way that I thought about it was, how can I create machines that match the strategy that would satisfy the objectives of the stakeholders and get those machines rolling in a trusted way that could very efficiently be grown. So there we started with logistics, which in 2011-12 was very early days, but partnering with Prologis at that time was a very scalable way of entering that market. And we were able to do so across the globe, starting in 11 countries in Europe and then bringing that to the US. And so that grew over time. Then there was office at that time. So 2012, we made our first investment. We were gearing up, closed February 2013, to do a multi-city office strategy with, again, trusted aligned partners. And that's still very relevant today. Finding alignment with best-in-class owner-operators who have skin in the game as well is a great way to find scalable and nimble strategies. So that strategy in particular grew from 1.26 billion to, I don't know, it was many assets. Started with 5 assets, went to 13 assets over a number of years, and replicated that with other large parties who knew what they were doing, who we could find alignment with, like Boston Properties, MetLife. There was other strategies like that, and that worked for office at that time. Now we're doing that in residential and in different areas of logistics, not just big box for the Caisse. So it's creating machines that fit within a top-down strategy and then can source and secure bottom-up opportunities. Instead of investing in an asset class, so we have top-down themes. Right now we're focused on housing shortage in general, but very selectively picking our spots. Movement of goods, logistics, and that is shifting trends. Anything to do with tech-enabled businesses, including data centers, and then accumulation strategies of need-based real estate. So within those 4 top-down themes, we're looking to align with best-in-class operators and then basically develop strategies where we can generate alpha and that are scalable and flexible. So rather than, for example, in residential, rather than buying a portfolio of multifamily assets and entering the market at one spot rate, and then not having too much control over how we drive NOI other than the market conditions, and then selling, we're utilizing and brainstorming creative strategies. Within my team at all levels, I've really strived to create a safe place for constructive debate and brainstorming, because I do think creativity really pays off. Multifamily, for example, right now, for good stuff, we can't make the returns work for a value add return target. But when we can think about, for example, one strategy is construction pref with an option to buy. So we're generating outsized returns for a period of about 3 years with an off-market option to buy before stabilization. Then we can choose the assets that we want to actually buy and invest equity in. We know the assets very well by then. Create a portfolio and also participate in the asset management company to generate alpha returns. And then we can syndicate that down to other investors who are looking for that exposure. All the while maintaining flexibility about dispositions, so we can stabilize the asset, hold it for 1 year, 3 years, and find the right timing for those assets. It doesn't all have to be at the same time, a singular exit. Other things like manufactured housing, we have developed over time, where we are also part of that asset management company, and we are doing different verticals accumulating assets over time and then selling sub-portfolios or entire portfolios. In the interim, we'll also have the flexibility to syndicate down and bring in new investors who want exposure to this newer asset class. So really scalable, flexible, being creative. Always keeping in mind the long-term objectives and the near-term objectives of our stakeholders. So, for example, we want value-add returns. At the same time, having come from a period of 5 years where U.S. real estate has not delivered stellar returns, especially compared to private credit infrastructure, even the public markets, we're very focused on near-term returns as well as the value-add. Well, what does that do? That's like, okay, so if we want to do data center development, we can't suffer the J curve. So how are we going to solve for that? We're doing one strategy where we're going into pref equity that's convertible into equity once you sign a lease and can move up the value of the land and capture that return. So really staying nimble and making sure we are always keeping in mind, does this investment, we should learn from the past, but accept the present, and then do the right thing for what we need to achieve in the next year or two. And then also keep in mind, how does that framework look for the next 5 years? So returns. Second is risk, making sure that we're mitigating risk, setting ourselves up to have the right governance and flexibility to mitigate some of the risks. This includes sustainability. So we're just working on a new global sustainability model where we're going to apply certain parameters across the globe of how are we going to assess the risk and what requirements are we going to impose on ourselves to address those risks. But really that's one example of a risk, but staying ahead of the curve for all types of risks that we can imagine, and stress testing that portfolio and having the right governance and plans in place for when things shift, we can move. We're not stuck, we're not beholden to a particular original business plan. We're trying to keep everything very flexible. So that's how we're keeping things, keeping our investors' return objectives and sensitivities in mind. Opportunities, I'd put it in 2 categories. So I already said about the 4 food groups, the 4 top-down themes. I think the traditional real estate sectors that still serve our needs make sense. Within those sectors, however, I do think diversification is very important. So for residential, I want to be overweight in U.S. residential, but that doesn't necessarily mean I need to have a tremendous amount of outsized multifamily risk. When multifamily risk, I would like some manufactured housing, complement that with single-family rental, also pay attention to affordable housing and round that diversification out within the living sector. And similarly for industrial. So I'm looking at big box, but also what's going on in infill strategies. What about light industrial outdoor storage? So making sure we have a diversified portfolio within the traditional food groups. The second part of it would be paying attention to alternatives and long-term trends. So when I went into logistics big time in 2011-12, it was very early days. Now, that's true. You don't always get it right. It doesn't always. I think the investment has to stand alone, on its own, makes sense. But then there's an incremental alpha that you can achieve by the aggregation strategy. So I look at need-based real estate that's very fragmented. Medical office is an area that we're trying to go into. Senior housing, really looking at what are the underlying fundamentals leading us to? What are we going to need? And then finding ways to access that. The challenge really is that takes a lot of manpower, and that's not our business model. So therefore, the need to partner with best-in-class owner-operators, but also boots on the ground that can source these opportunities and work the assets very proactively in an aligned manner is so critical. So it's the traditional food groups and then forward trends. And the forward trends would include data centers as well. Like I mentioned, we're working on data center construction is where we see the opportunity right now, as well as some powered land banking.